It's a good team.
Welcome back to another episode of Chart Talk. We're going to go over the market outlook, some member-submitted questions, some social media questions, some favorite charts of the week, some of our best and worst trades. Bennett, how's it going over there?
Doing good. I just bought a Ducati today.
Hey, how's that?
I mean, I can't get a license plate on it because DMV is closed, but
yeah, some people might say I haven't had a license in 8 months, and it's really tough to get a license now that the DMV is closed. Some rumors, though.
Yeah. Bought the dream bike today, so.
How fast it go? How fast have you gotten it?
I mean, I literally just drove it home, but it goes. It's an 840 Ducati,
so very fast.
As fast to Brooklyn as you ride your bike. But
that's funny. All right, let's jump in. Let's jump right in.
Want to jump into the market outlook?
Yeah, absolutely. So we saw a gap up today. Monday morning. We somewhat held the strength into the close, but I got to be honest, stocks looked really tired out there. And my personal take on it, this is the biggest week of earnings, like by far. The reason being is we have Google, Amazon, Facebook, and Apple all reporting, and those four companies equate for like 20% of the S&P. So if we look at all these charts today, they all look very, very similar. We see Google here, gaps up, slight sell-off, and then we look at the run, it's like 30% off lows. Amazon, same thing, opens highs, just kind of sluggishly sells off all day. To me, that looks like profit taking. Facebook, same exact thing, and then Apple stayed pretty strong throughout the day. But you see the theme that I'm getting with. People are just gearing up for these companies' earnings, and my take is that the market just goes whichever way these earnings go. If Amazon kills it, and they rise a bunch, that'll bring the NASDAQ with it and so on and so forth. My thinking is that much like Netflix, looking at this Amazon chart right now, it's been on such a big run into the report that it would need some fucking crazy, unheard of, bullishly earnings report that we've never seen before to make this stock lift from here. Like Netflix had an amazing report, but the thing is they went on a huge run going into the report, so they kind of took the gas out of the earnings. So that's kind of the action I'm looking for out of the big names. What I'm looking for out of the market. What are you thinking over there?
I think talking about the SPY, I think that this 290 is such a significant area of resistance that we're kind of just getting back into, and we can start to see that the market has been kind of consolidating a little bit in this range as 290 to 270, where it seems like this 290 is going to be a little bit, like you said, stocks have been a little bit sluggish, where if we can kind of hold out in this range, I think it sets us up, for, again, that slower grind back to, back higher. And we're seeing a lot of those individual sectors when we go through, the tech, healthcare much back at highs, the utilities, a lot of them forming, mid cap, small cap, the Dow, materials are all forming the same chart where they're getting back to this significant resistance area. And it's just whether they're going to continue to consolidate or break higher. And again, talking to a lot of other people that aren't really active traders or investors, their main thesis is the market has to go back to lows, and usually when they think that the opposite tends to happen. So I'm looking to see the market much higher than much lower going forward.
I was in that camp too. Last week I was getting pretty short. I made some money to the short side. Then everyone I talked to, this has become the most hated rally in the stock market history. It almost makes me think we go higher from here just because, it's all the little guys telling me how we have to lose 30% and all these things have to happen. So, just leave it to psychology of that, even though it seems crazy to go higher from here, it's definitely a possibility.
Yes, there was like a funny tweet I saw somewhere where they said, imagine a year ago if I told you there was 20% unemployment, gas prices went negative, all the crazy things that have happened, and then the last part was the market is flat. And I thought that was it's true. It's all this craziness going on, the market just doesn't care. But I think with that, if you want, we can jump into the memory ideas because there is quite a few.
Yeah, we're gonna go through them quick. What we got?
All right, so first we got Anish. He's looking at this APO through 40.
It went. Looks good. Good job, Anish. It's got earnings coming up. I'd definitely sell out before earnings.
Yeah, Yes, and we got next one is this
Finance
work.
companies were strong today. Apollo, so that makes sense. Sorry, go on.
Next was this work through 28 and then through.
Work. Oh, this came back today, huh? I didn't keep my eye on it. I had a feeler in this a couple days ago. I actually like this a lot against the support area. And they don't have earnings for a bit. Shit, I might buy this one tomorrow. Yeah, I like that one a lot through 28 against these lows.
Next we got David Taylor. He's looking at this WUBA through
Woo-bah.
that 52 half area.
It's okay. This is an okay flag. I'm personally avoiding any Chinese name. Anyone that's ever fucking stepped foot in China as a company, I am not trading that stock. So the daily flag is nice. I see what he's looking at, but I'm just avoiding China like the plague.
Next we got a cheaper name, this APT through 15.
This is a Corona name. I don't fucking know what's going on with this company. I think it already had the run in it, and these companies, it's like it's so news dependent. So I'm avoiding this one too.
I'm with you.
You see when the buy was, and it's when it opened up at 40 the day before that.
Yeah, and it's like if you, and even for David, go back, like you see this, like what Shig said, this thing went from 5 to 40 and back. Go back and look at every bubble stock. Look at Bitcoin, look at Tilray, look at any of those names when they have those crazy moves from, when they go up 3, 4, 500% and they come back basically that same price. Find one when it ever went back to highs, and you never will. So hopefully that'll give you the answer of why we don't want to touch it.
What if I type up advanced micro devices?
I don't think it really had. When did it ever have that parabolic? Okay, but that was. Yeah, but that was. What are you talking about? When it went from 8 to 36?
I'm talking just we're talking about name one. This one was at 40. It went to fucking like $2, and now it's back at 56. It's a long-term hold.
Yeah. Okay. Well, try to find one in the last 3 years that has done that.
Ah, caveats.
The 80s. Okay, so next we got this Yeti.
I haven't had a good read on Yeti lately. You were saying people. I saw people calling you out, saying nice job, call out with this Yeti. Looks pretty good off this 24. They got earnings coming up. This chart broke to me through this 28 area when it broke to the downside. So I need more consolidation or more of a setup. What are your thoughts?
Well, so like what you said with that breakdown of 28, when I was referring to back with the border market stuff is that similar day. That was like the beginning of March when that was like the real crack when the market really got kind of, pushed lower.
March 6th?
That started it.
Okay.
And that's, when you look back at a lot of the sectors and even, the SPY and the Dow, that's been a battleground for a lot of these sectors in bigger markets where we're kind of, and like for Yeti, it's $2 lower, but that's like the area it's battling with. That's that support that's now becoming resistance.
Right.
And eventually we just want to see that break. And for Yeti, we started to see it kind of, coil up and flag a little bit. And now it's starting to push through that area. So that's kind of a similar theme that I'm seeing in a lot of the sectors and some of the individual names, which tends to be, a good sign.
Yeah, definitely. But that's also what makes it really difficult with the area we're in, where it's like we got that move back to this consolidation area, and now we're just in a straight congestion area. And it's pretty much like, most stocks, because, the broad market did that. So most stocks are looking like that. Just noting how difficult it makes any trading in this environment, because everyone's thinking the same thing. It's like we're 30% off lows, but the charts right now they're saying higher.
Yeah. Next we got Hunter. He's looking at his Piton through 34.
Piton. Yeah, I like this one a lot. It's not through 34 though. It's against $30. That's the trade. Because we saw Friday. Oh god, the fucking price action Friday was nuts. So you see this. I have it up on the screen. Friday, this huge volume that comes out of nowhere. We know, so that's the volume. Those are the buyers. We have to have our stop below that area. So that's why I'm saying this trade is against $30. But that catalyst was that they had 23,000 people in one live class. So it just kind of shows you their reach and people are using the program. It was a positive catalyst and it caused the stock to run. So I think, judging by today's action, I'm going to look to see if it holds this 30 again, and then look for another entry against $30. But definitely like the name.
So you bought a Peloton. I have a question. Other than just the one-time purchase of the very expensive bicycle, do you pay monthly to be in those classes?
Yeah, you pay $40. Okay. And you have to pay it. Yeah, so that's the recurring revenue theme.
So that was like the big thing for Shopify, where this was a $20 stock when it first came out, and now it's at $650. Their big thing of why the stock has done so well is for how fast they've grown that subscription business, and that money's always coming in.
Right,
and
that's their moat. That's their
Yeah,
moat,
that's
as
for-
Warren Buffett says.
Yeah. So for Peloton, other than that one-time expensive purchase, that monthly price you got to pay, that's big for the stock. That
Exactly,
will always.
and it's one big like community theme, and it's like you can. So I can like I have friends all over the country at this point. We have like a little group chat going. And they're like, I can't wait till you get your bike. We can all race in the same class and shit like that. So they have these little like things to make it more of a community aspect. And we've seen with our business trading experts how adding a community aspect just increases the profitability of the business tenfold. So I'm pretty bullish on this Peloton still. I think their earnings are going to be nice. But I mean, their financials suck, so it's all it's all
Yeah, but that's
it's all
with recent
sentiment.
IPOs. That's
Exactly. So they can go to 60, 70 on some bullshit, and then that's where they're talking about frothy valuations and stuff.
I think Shopify lost money for like the first few years,
Right.
and it was, they still were chugging along. We got Darren looking at this C day through 54.
CDAY.
C day. I'm sorry, 56.
Let me give a big shout out to my boy Darren real quick. Darren, absolute monster trade. Type up BGNE.
Oh, I remember that
Yeah,
one too.
buddy. I remember him asking me about chart talk, and we were talking about how, because this is when the market was much more beat up, and I was like, yeah, this looks like a good one to bounce off support. These are the type of entries you have to look for versus stocks that have already ripped up, and he's still holding this one. He's up like 30% in it. So absolutely beast trade on his hands. He's the dude.
Darren.
Yeah, he's the man. I like this level a lot. This 55 level. They do have earnings coming up, so that probably takes the trade away a bit. Because it's a breakout, and it's tough to expect that far side follow through. But right before earnings, when they have this huge catalyst coming up, even though we've seen it in so many stocks lately. But I like the setup, but I don't like how they have earnings coming out. But that's definitely a nice setup.
Okay. Next, we got Corey. He's looking at this RNG through 250.
Joe DeFrank is in this RNG. I think he's pretty vocal about it. He's looking for. So I mean, we saw this the action today. I mean, I'm not buying this at 250. If you want to buy this, you want to buy this on a pullback against 220, something like that. You don't want to buy this through highs. I mean, it has to set up a lot to get through those highs after today's action.
Mm-hmm. And then next, Corey had a question that I'll just answer real quick. He asked, would it be wise to move money from a trading account into a Roth IRA, specifically when the trading account is more than double the value of the Roth IRA? So Corey, the first simplest thing to do is to just set up like a weekly deposit into your Roth. If you set up $115 a week, you will automatically max out your Roth every single year without having to think twice about it. The other thing, if you want to just max out one shot, by all means do so. But just remember, when you put the money into that account, unless you're looking to buy, take some money off your personal purchase, that money is going to be locked away for a long time. So if you don't need that money for anything, really, from an emergency standpoint, anything like that, by all means do it. But again, it's much easier just set up the $115 a week to go in and just check that box and continue growing both those accounts. So hopefully that helps. Next, we got Joe looking at KR through this 33.5.
No way. Really? He's leaving it to 33.50?
Mm-hmm.
We just bought this thing here. All right. Bennett. What am I going to do with these kids? How do I reach these kids? I mean, everyone who bought KR bought it this day, Friday when it triggered. Was that Friday or was it Thursday when it triggered? And it's a very, very simple swing trade. There's resistance at 32.90, so we're buying 33 with a stop at the low of the day it triggered. It's about $1 risk, and they're riding out the swing trade. There's no level at 33.50.
Yeah, Joe, you're chasing. You missed it. Let's move on. Next, we got Alex Smith looking at this American Express through 85.
Oh wow, they had earnings. Wow, okay. I didn't see this one. I like this. I like how they had earnings already, and it's out of the way. And now this super tight consolidation in an area where it's pretty beaten down. We saw financial strong today. I like this. I don't mind that at all.
I like this a lot.
Yeah, I like that a lot.
I bought in this a little too early, back up through 90 when the market was getting really crazy back in the beginning of March. I've just been sitting with it, and this is just like, and even for you love like those wedges. You can kind of draw it out.
This is it. Yeah, I bet the hourly
this is like
so
a super tight little.
Exactly. Yeah. So once it gets above this area, that's like this is an area where once I see this take out these daily highs, this 85 area, let's say I've been trading it, that's where I look to load the fucking boat, that area, when it comes first out of that consolidation.
Yeah, I think it's one of the best ones we've seen so far.
Yeah, right there.
Let's see.
AXP.
Next, we got PPD through 24.
Yeah, we'll keep it on the radar. It's got some work to do with the way it closed. Closed 10% from the level, so we'll see how that one develops. It's one of those names that moves 10% every day. So we'll see. That one needs to set up more. Keep it on the watch list.
And next we got this XLNX through that 92 area.
Yeah, I like this one. So I was watching this XLNX this day on earnings, and I was like, is it a short? What's going on? Because of the gap down and where it is, it's a semiconductor stock. But they turned around really hard on earnings. The buyers showed up, and now it's looking to take on this 92 level, and it becomes one of these bounce back plays. And you like these after a positive earnings reaction. So I'm definitely watching this one set up through this 91.50.
Mm-hmm. And then next, he's looking at this Intel through 60.
Yeah, buddy, I like that Intel. I was very nervous for Intel. Same thing, where it's like it gapped down huge on earnings. This was Friday, and I was like, damn, they beat bottom line, they beat top line, they gapped down 10%. But the earnings were bought up right away. I guess only, not 10%, whatever. So the earnings were bought up, and they filled the gap. That's what you have to like about Intel. So just taking that information in itself, that's very bullish. When a stock gaps down and it gets bought all the way back up on earnings, very bullish. So through 60 or wherever it sets up, I definitely like this one this quarter long. I'm just not sure where yet. 60 looks like the spot for now. I'm not sure if it's ready yet. It's only had earnings 2 days ago. So, the thing, all right, something I want to point out. The thing with the earnings season, the beginning of earnings season, people are generally overzealous and don't really wait for things to set up because they're like, oh, it's earnings season. I have to put on earnings trades. Where it's like, this is, this name looks like it moves higher, but it's not a great setup yet because they only had 2 days of earnings, 2 days trading with earnings behind it. So I don't want to get overzealous with these earnings names, but I like Intel long.
Yeah. Even like that for Intel, it's like if they want to rush in, it's like the real out is 56.
56,
so
yeah.
Trying to buy 60 versus 56, you're risking $4. You got to take that into consideration.
Right.
All right. Next, we got Juan Pablo in this space, SPCE through 18.
I don't have a good read on this name. I don't really type this name up. I don't watch it a lot. So, it's here. I'll show you what I see of the trend lines. Yes, I see it's holding that ascending support, and it's trying to break this little mini downtrend. So yes, in that aspect, it looks good. But this is like a super hot name, super volatile. So I'm not really sure about it. They have earnings coming up. It looks decent spot on the chart. I'll give you that. But newsy name.
Yeah, I feel like if it were for me, I'd just wait for 20 and just
that makes sense.
Take it then. Next, NVAX 22.
The fuck is this thing?
I don't know what it's saying, but
the trade. All right, so the trade they're looking for, 22 is too high for the trade they're looking for. It's not a great setup. This is a complete day trader setup where it makes this high and it has this controlled pullback, and then you want to buy through this high at 2050. That's the trade they're looking at. So to buy 22 is too high, but also it's just not that great a setup. I don't think. The name is up so much that to depend on it to go higher from here is asking a lot.
Yeah, when it went from 8 to went up 400% a month, you think you're a little late.
Yeah, March 2nd, this closed at $12, so it doubled up from there. A month and a half.
Yeah, a little late.
Double?
All right, next, Alex is asking about your favorite name, Boeing, and it's a very broad question. He says, after earnings,
I should be saving so much fucking money and saving people so much money in this. I called it short at 185. Yeah,
And weren't you? Wasn't everyone so pissed off that you were shorting at 180?
Yeah. Well, that's they hate you in the moment. They love you after. Yeah, they probably hate me after too.
Yeah. So Alex wants to buy it through earnings. Basically, going off exactly what you just said. People being overzealous going into earnings, wanting things to go.
Wants to buy it into earnings?
No, he's saying after earnings. At least that he's wanting earnings to get out of the way, but kind of going back to what you were saying. When people
you'll have a chance to buy it at $40 after earnings. Sure.
Yeah. Alex, it's a pass. Joe DeFrank, this is a question for you, Jake. He says for NEOG.
Yeah.
He's looking at 66.5 versus 64.
Yeah, I've kept this one on the watch list for a few weeks. Explosive healthcare name. The problem is it's super thin. Only averages about 300K volume the last few weeks. So but they do have earnings out of the way, which is good. And it's a really nice consolidation, really nice tight chart. So if it's able to get through that, what do you say, 67.50 or 67?
66 half.
I mean, just wait for today's high of day is 66.74. So at that point, wait for 67-ish. But when I take these trades, I don't load up on size like I would in like a Netflix or like something that has a ton of liquidity just because it's so thin. So in these trades, you have to anticipate if you get stopped out, you're not going to get stopped out at the figure or anywhere near where you place your stop. You're going to get a decent amount of slippage. So always take that into account when you're trading these thin names. When it has under 500K average, you're going to get your real risk is a lot greater. So I like this a lot through that 67 area, but I have to know that it's a thinner name and I'm much more in harm's way in these names because of the lack of liquidity. So just take that into account when trading this. But I like this one a lot. I'm with him.
Okay. And then he had a question for me. He's looking at Twilio, TTWO.
No,
He's
take
looking,
two.
Oh, yeah, I'm sorry.
Okay.
Wasn't it?
So
Take two.
Video
He's
games.
looking at it through the 130 area after earnings, which is on 511. He says, I've been watching this one forever, and I can't tell if I'm building a bias. I don't like the daily, but I like the longer-term chart. Ideally, good earnings can start to build in. So the fact that you've been watching it for this long.
Wait, just type up the monthly, though. It's beautiful.
It looks great.
The daily is
so
tough.
It looks like this is like an amazing pattern. The only thing that is going to kind of trip him up, and I don't want to trip you up, Joe. I'm just saying, the thing went to 100, now it's at 130, so it's up 30% this month. You got to really be perfect up here. If you're buying through 130, it's like you want to give it versus 120. If you're looking at it longer term, you got to really respect those bigger ranges. You can't look at the monthly or the weekly and see this huge flag, but then try to trade it off a daily. So if you really do like it and you like it on a weekly or monthly, you got to trade it based off that chart. You can't take one side of it and then try to trade it differently. Because it's just not going to work, because this monthly pattern is going to take months, if not a year or two, to really make that measure move. The measure move from 140 to 80, you're looking, this thing could go to 200, but it's not going to go there in a week or one earnings. It's going to take 4 or 5 earnings for it to get to 200. So just got to take those into consideration.
I think that you just made a really important point, and I think that's like day traders or people with smaller time frames. Number one mistake is that they find the best charts, they find the best weekly charts, but they trade them with a daily and hourly stop. And it's just like, you if you want to trade these weekly breakouts and things like that, more than not, you're going to have to look at them and trade them from a bigger time frame. That's what a lot of people have trouble with.
We even saw earlier, this was the end of last week, one of the guys put up it was like a 5-second chart.
I saw that and I put my phone down. I almost fucking broke my phone in half. It was a 30-second chart. We're not going to say names. We're not going to bring it up again. But that shit is wild.
So this was one thing that I learned, and he was appreciative. I talked to him on the side. I'm like, look, man, you can never post that shit ever again. Like, never, ever are you ever posting. Don't even make up an excuse. Don't even debate it. That's it. It's over. And he's like, thank you for messaging me privately. I got you. Don't worry about it, because
the 30-second chart is nuts.
I would have,
oh my God.
murdered him in the chat, but it was a lesson learned. He'll never do it again.
Yeah.
All right, so next we got Golem. He's looking at your favorite name, your AMD.
Yeah. I don't give a fuck about AMD.
No, I know.
This is your favorite name. What's he like?
I think he's looking at
tomorrow.
Yeah, so I think he's looking at it for an opening range breakout.
Yeah, I mean, this has all the technical aspects you want to see of an opening range breakout. Strong stock at highs. Let's say if they have a good report and it's gapping up, it could very well gap up to this 58 and break out from there. I'm just a little wary of opening range breakouts with the market, with going on a 30% run into earnings. I'm thinking Netflix had the best earnings. Netflix earnings were really great, and they couldn't really move because of the run that they went on before earnings. So I'm kind of anticipating that behavior. I'm not as hyped up about opening range breakouts as I usually am going into earnings season. So it could be there. The setup could be there, but my thoughts aren't. I'm not super excited about any opening range breakouts right now.
All right. And then next he's looking at this BAH through 78.
Yeah, someone else hit me with this on the side today. Yeah, you know what? That's not a... I'm losing over here. Yeah, that's a nice level. I like this. When they got earnings. They got some time on earnings. Yeah, it makes sense. I mean, just be aware. This is every chart, though. We have the same answer where it's like it came from 50. So, You know, it's just be wary up here. This area is not a max risk area. You know.
Mhm. Definitely agree. Next up, we got Khan. He's looking at this end tap through 44.
Yeah. See these. All right. So you're not. This is. I like this end tap a lot more. Just like I like that American Express a lot more than Booz Allen Hamilton BAH. This AXP as well as this end tap. They have a nice little bottom base they're coming out of, and those are the trades we've really been seeing working. So it's like you're not asking a ton out of the stock to disconnect from the market at this point, in this area, breaking off support and moving higher. So I like this end tap a lot, similar to that AXP.
Yeah, even if you put up like a weekly really quick and you really zoom out, you go back to almost 2012, we can see this like 45, 44, 46 area has acted as a pretty significant level of resistance all of 2012 through 2018, and it finally went and had that major breakout. And if Frank, you're still watching this, I hope you are. This is a really good example where when you're talking about what was the name for a TTWO, when you're looking at that breakout, this end tap, we're looking at a weekly, so we're looking at a 6-year consolidation under 45, and then in end of 2017, it has that 100% breakout, but that took an entire year. So this is like a really good example of when you're looking at that really macro weekly or yearly setup, it does take just as long for it to break out. So hopefully this is like what could happen, but just realize it takes some time. Okay.
Where we go from here?
Next up, we got this ALGN through 197.
Pretty similar chart to that end tap. The only thing is they have earnings April 29th, so we'll just wait to see what those earnings hold and then figure it out from there. Yeah. Next.
All right. And let's see. Question for Kenley. He says, what exactly do you do for a living outside of trading experts, and how did you get there?
From me or you?
I think this was one was from me.
Yeah.
Yeah, because he goes, I'm looking into a financial analyst / planner route.
It's not me.
Okay. So Kenley, I don't know what a planner route is. Financial analyst, again, that we personally hate analysts. They're going to raise the price target, they're going to drop it, and they're usually always horribly wrong. So we don't personally.
It's a job to do. They just have a job.
It's a job. Yeah. If you can get the job to be an analyst, do it. Just we're not going to. It's not something I could ever do. I don't think Jake would ever be an analyst either. No. But if you can get it, by all means. I'm a financial advisor. I focus on kind of the longer term stuff, it's helping with the 401k, setting up 401k plans, things like that. Again, if you want to maybe hit me up privately, we could probably dive into a little bit deeper. I don't know how to answer that to a broad group of people.
All right,
next, Jake Fox looking at Nike through 90.
This looks pretty good. I was thinking honestly coming in that all these charts were going to end up shorts, but the market stayed up here. So this is like, you think Nike's going higher, you think the market's going higher from here. It's pretty much, the SPY is a very similar chart to that Nike. So, it's everything is very market correlated at this point, sadly, or lots of things, not everything.
Yeah. For this Nike, like if it could, again, perfect world, if we could kind of pull back in through 84, next week or two, and then get back up to like that 90-91, I'd like it a lot more.
Right.
But it definitely, that's been a solid level since all 2019, that 90 area. Okay, so we were out to the member questions. We got a couple social media questions. So, and they're not too bad. First one, we got Jake Lundstorm asking about Pfizer, PFE. I'm just going to assume that he wants to buy 39.
They just have earnings literally tomorrow, so pass. Next.
Yeah. ESPR.
Oh, I've been hearing this name going around a lot. Earnings, what's today, Monday, Tuesday, Wednesday. Nothing to do right now.
Yeah. Next, at Infra05, asking about Merck. Pretty much his 84 level.
Oh, it's a really nice level, but again, earnings tomorrow. Nothing to do. Yeah. Nice level, though. I like that chart a lot. I'll give him that.
Yeah.
Yeah, go on.
I was in Merck for a little bit. I was buying up through bought early, like 78, and then I added down. But I sold into 80 when it rolled over. And this is like for Jake Fox, again, if you're still watching. Like Merck at 84 the last time, like middle of April, that kind of reminds you of where Nike is now, where it needs that little, a couple days back down and then get back at the level. That's what I'd like to see in that Nike for it to really push higher. So hopefully, this again, similar examples. Next, we got Nick Chobani. So looking at this ROP through 320.
I mean, just like all these earnings, April 28th tomorrow, so it's a pass. But I like this. I like this spot. I like this technical chart. If we're gonna take anything from this, this is the most actionable chart we've seen. Out of what we've been looking at. So I'll give them that nice actionable chart. But earnings tomorrow, so just wait for the earnings.
All right. Next we got Valentino. He's looking at Fate through 32. FATE.
Valentino, what up?
I know. I don't know why he's asking this in the social media questions, but
Brutal. Trying to get soccer lessons. When is this one got earnings? It's been on a big run here. You'd like to see some sort of momentum flag here before the next leg higher. Could definitely move higher, but I want to see some sideways before this level. It looks a little tired to me.
And then this ONEM through 26.
Oh, hey, what's the volume like? Oh, it's got volume too? Oh, Valentino, my man. Hell yeah. Hell yeah. Hell yeah. Through 2650, I'd say, just to, that pivot. But the real level is 28, is IPO highs. But that is a fucking beauty.
Yeah, it does look pretty good.
It's got
All right,
volume
next we got Brandy Cohn, one of our young guys. He's asking, how do you avoid buying a false breakout?
So, I mean, there's a few ways to do it. I know what he's saying. It's obviously this is hindsight because it's gonna know after. But I know people that will buy small size, and these are big time traders. They'll buy small size, let's say, before through the breakout level, and then once they get that confirmation is when they really add. But you have to understand that paying for that confirmation, you're risking a lot more in the trade by not buying the breakout level. So I don't do that. I kind of just, I buy the breakout level. I want to see volume going into level, and then I take it. I rarely add above the level. I do sometimes, but I know that's one way to do it. But honestly, it's so hindsight to say, how do I not have losing trades?
Yeah. And again, for Brandy, I know him. He, young guy. He's like 17. So again, just like Shay said, it's hindsight. You're gonna buy breakouts. Some aren't gonna work. That's just a part of trading. Every trade's not gonna work. You just gotta make sure when you're wrong or it is a false breakout, you get out as quickly as possible. You don't kind of get stuck in it and thinking it's gonna magically turn around. So that was it, Shake. We wrapped up the social media questions. Member questions. If you want, we can jump into good trade, bad trade.
Yeah, sure. I don't really have too much to share here. I was short this Apple last week and I covered into this down move. I held a little bit here, but I didn't really do a ton last week. It was a bunch of back and forth things. Friday I got into some Peloton. I didn't get as much as I liked. I bought a little bit more today, but I got out kind of break even there. What the hell else? I'm trying to figure out. It's funny. I can sit here all day and forget what I did.
Yeah.
What was the other one? Oh, Netflix. I tried to leg into this Netflix today on a feeler. So here's this Netflix setup, and I've seen Netflix do this a million times where it's like, oh, it's too high, but this one could do it, and then it just goes on the parabolic runs. So I'm looking at this all-time high level at 420 back in June 2018, and now Netflix on a really good earnings report is turning that area into support. So I was trying to feel my way into a trade there. I actually had a fucking $500,000 of this thing today. I walked away with a $120 loss. That's impressive.
That's not bad.
That's not bad. So I think
Penny,
I lost
penny a share.
Yeah, exactly. I lost a penny on the trade. I'll show you how I traded it. So the price points we got to see on the daily here are 416 and then 413, which is the low of this flag. So I was buying my first shares on the dip this morning at the low of the flag, and then once I got confirmation, it kind of moved higher, added to position, then it came down to turn this 425 area into support. I added some, and then when it didn't push up from here, this is when the market first began to look very stagnant to me, then it came right back down to my price, and that's when I started to get out of my position. So I had like 500K here, and then I just down ticked 300K once I see this, it doesn't have the juice in it. So, that ends up being a nothing trade for me, and you can see the daily. It's like nothing happened. It's so funny. I can spend my entire day looking at every tick of this chart, and it's like literally nothing. So that was really it. I haven't done a ton. What do you got?
All right, I got two little ones. So one is, again, people were talking about Snap earlier today. So, we had Carl last week make it was like 300%. So I've been sneakily in. I bought a decent amount of snap back in 2018 at 7. So I've just been holding on just so I can get like a 400 or 500% trade. So I've just been sitting on it, not telling anyone. Just so I got one ready. So that's just me just being patient. We spoke about some of the guys got in. I believe it was today. If you look out, the 18 level has been a pretty significant area of resistance in this Snapchat. We really don't talk about it too much because there's just so much easier names to trade. But that's just been one I've been sitting in for over a year now. And then I guess the bad one that's starting to turn around is going to be, again, American Express. I mentioned a little bit too early up through that 90. This was like March 13th. And again, it was just too early. The one main mistake for me looking at a lot of these charts was, again, during that time, the big thing was looking at that retest of the 2018 lows in the SPY. My mistake was expecting it to be, a perfect retest and bounce off that, when usually on the way down you get those shakeout moves, and that was my mistake. So I had to sit through some pain, but now it's again starting to consolidate, and now we're starting to get our entry where I can start to add in up through 96, and then again look to add through 90, and then eventually up through 100 in time for that move back to 140. And I would expect this to take probably at least the better part of a year, but that's kind of the plan for a name like American Express.
So credit card companies aren't forgiving credit card interest, are they?
No, why would they?
I mean, the economy's closed.
Well,
but I'm saying that's like a shitty feature of a company, but it's probably very bullish for American Express and all credit card companies if people fucking pay, which God knows.
I mean, right now you kind of have like everyone trying to play like doing as much charity or goodwill as they can, but once this is over, it's going to go right back. So once you start,
credit card companies aren't.
No, but I was saying because once you start doing that, then it's you're gonna have every single person calling like, oh, can I get 6 months for free? And they're just like, we don't care. Let the other people do it, but we're not taking part. And again, people have crazy credit card debt. It's not going to go away anytime soon. So definitely behind American Express and any of the credit card providers, pretty much. So I guess with that we can jump into top idea of the week.
I mean, I like this IIPR a lot going into today. They kind of taken away from us with the gap up, and this is what I was looking at is all the weed names really woke up, and then we see CGC was up 13% today. So that was the kind of move I was looking for IIPR. They didn't really give us a good entry. What else? Yeah, I mean, we talked about Snap. I like that one a lot. I'm kicking myself for not buying this Friday below 16 against 15. I was like, I don't want their weekend risk, even though I really like their earnings. I really like their daily active user growth and shit like that. So I feel like I missed a big opportunity not buying it against the earnings day lows. And it's either buy through 17 or don't buy at all at this point, which both kind of seem shitty to me after the opportunity I had Friday. So, everything depends on these companies reporting this week. We have, 1,000 companies reporting starting now till Friday. So we're going to have so much action that things are going to change so much in the coming days that I don't really have to have anything that I love or don't love at this point.
Mm-hmm.
What about you?
Yeah, the only thing, my main thing, I really like this AMAX. I think this
really
is
like
finally, it's finally starting to set up where it's
just now it's so tight. So I'll give you the wide action, and now it looks like it's ready to break out of the wedge, and just like from a trading from an entry point, like this is a very, 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 very good setup to me and you.
Yeah.
It's your setup.
Yeah, I like it. Big fan. All right. So
Book of the week?
What's next? Book of the week. Yeah. Let's do it. All right. Shake, what are you reading for the book this week?
All right. So we got our biggest week of earnings starting up. I read this book every single earnings season. I literally dive into it 4 times a year, a few chapters. How to Make Money in Stocks, William J. O'Neill. This is like one of the Bibles. There's like three books that are considered Bibles in trading. Trading in the Zone is one of them for psychology. This is it for pretty much technical traders. And this teaches you how you really have to look at earnings very simply. And if you want to dig into the earnings a bit, looking at growth companies more so, and even the big companies. But I mean, this really dives in what you want to know, what the important factors in earnings are. So when I talk about like they had good earnings, they had bad earnings, I'm referring to the principles that are followed in this book. Absolute classic. How to Make Money in Stocks. Bennett, what do you got?
Like that's one of our most like recommended books.
Yeah, yeah, yeah.
And Slim.
Can't slim, baby.
Got Triumphs of Experience. This is. Remember the few months back we did the Myth of Stress and we did like that questionnaire with me, you and me going back and forth. We
Yeah.
reversed, a stressful situation. The author of that book, his whole process came in this book. One of the longest studies that's gone on. It's like an 80-year study. It's gone through like 3 generations of people. It's a little sexist because it's only about men when they started this study, and they've kept going through. But they just gauge, people's happiness, why people get depressed, how they succeed in life, things like that. It's a pretty thick book, but there's some interesting lines. Like there was one they talk about, like again, this is going back to World War II. So they talked about the difference between the men in this study, between them becoming majors or being privates, like dumb money traders versus professionals. And they said the main difference was the home and like the person's childhood experience. If they had like a good relationship with one or two of the parents, the guys in the army in the study that had a hard relationship with their parents were much less likely to become majors when the guys had at least one good parenting relationship. They were able to far exceed the others. So it's a pretty interesting study.
So you're saying kids from broken homes can't make it? Is that what you're trying to tell me?
No, it's
only the goody two shoes with both parents at home.
No, it's not both parents. It's as long as there's one, like either or. If the person had a good relationship with either or parent, it didn't have to be a mother or the father. If it had to just be one. If they hated both of their parents their whole life, it was much harder for them to see than the people who had at least one person to kind of lean on. But it's a interesting. Nothing related to the market.
There you have it. All right, let's wrap this baby up. If you guys, maybe a like, maybe a comment, fuck it. And that's all we got for you. All right. Till next time.
All right, guys. See you next week.